Hello, everyone. Good afternoon, good morning, wherever you are. Welcome to the ICIS Asian Base Oils and Lubricants virtual conference. Thank you very much for taking all the time to participate in this conference. I'd like to welcome our panelists for today. Firstly, in no particular order, I'd like to introduce Mr. Paul Nye, the Regional Director, Product Management, Lubrizol Additives of Southeast Asia and Australia. Very briefly, Paul has worked in the oil and chemical industry since 1990. Since that time, his career has been focused on the marketing and sales of fuels, lubricants, and chemicals, beginning with tech service roles and moving on to product and business management. Paul joined Lubrizol in 1995 and spent 2 years at the company's corporate headquarters in Ohio, USA, working in several different product categories, including fuels, industrials, and metalworking. Upon his return to Singapore in 1999, Paul has worked in a variety of product and business management roles in the industrial, metalworking, and engine oil market space. Paul holds a bachelor's degree in mechanical engineering from the National University of Singapore. Outside of work, time is spent with his family. They shared common interests in culture and history and exotic foods. In true Singaporean style, Paul.
Yes.
Next up, Mr. Ramatri PD, Global Head of Base Oils at Al Ghurair Energy based in the UAE. Welcome, Mr. Ramatri. Al Ghurair Energy is part of the diversified Al Ghurair Group in the UAE. Ramatri has been in the base oils trading business for almost 20 years, having previously worked with Henkel International, Vidol International, and Waxpol. Ramatri's area of focus has been largely on trades in Southeast Asia, the Middle East, Africa, and Latin America for Group 1, 2, and 3 base oils. Ramatri has in the past worked in senior positions with P&L responsibilities in locations including India, Singapore, and Poland. And lastly, just a brief introduction for myself. My name is Izam. I work with ICIS based in Singapore. I've been in charge of the Middle East base oils market over the last 3.5 years. Just another welcome to everyone. Before we sort of start, I just want to kind of set the stage for the topics and the discussions we'll have today. So, interestingly, as we all know, it has been an extremely challenging year for everyone in this particular industry since the start of the year. Based on what we have recorded in ICIS pricing, just a simple example, in Group 1 SN 500 FOB Asia pricing, these prices declined in the March to May period from around $530 to $395 per ton. That's a 25% drop in spot prices for Asian Group 1. These levels have not been seen since the post-9/11 attacks in the US. Similarly, in the Middle East, Group 1 fell to their lowest since ICIS ever began tracking these prices. SN 500 FOB Iran declined in the April to May period from $520 per ton to $380, a 27% drop in spot prices. Now, since then, we've seen some recovery. In fact, in Asia, prices have almost regained their pre-COVID-19 levels. What's been driving this? We'll get into that in a minute. I just want to set the backdrop for this in terms of applications. Well-known fact in terms of total transportation use, including marine and aviation industry, accounts for about 60% of base oils demand, 60% of global base oils demand. The passenger car motor oil demand alone accounts for 25 to 30% of base oils demand. Now, with that in mind, here's a brief look at what's been happening in automotive sales. July Western European sales, minus 2.2% year on year. The UK, surprisingly, was one of the strongest performers with a plus 11.3% year-on-year sales in July. In the US, a 12.2% year-on-year decline in car sales in July. The standout performer, China. Automobile sales up 16.4% year-on-year. Now, with that in mind, we'll sort of lead into this. Will 2020, given all these factors, will this prove to be a game-changing year for our industry? We have a poll running, and I hope participants would actually sort of participate in that. Make your views heard. Do you think 2020 will prove to be a game-changing year for our industry? And so now I pose these questions to our panelists, starting with you, Paul. What do you think?
Yes, I would be very surprised if the poll comes in and there's a significant number of people who say that this won't be a game-changing year. I mean, even before we entered 2020, there were already clouds on the horizon. If you look at the marine business, for example, this is the year that we are going to move from high sulfur fuel to low sulfur fuel to meet IMO 2020. And of course, if you load on top of that, all the disruptions in supply chains that have happened in terms of COVID, and also all the changes in consumer behavior itself, which we will talk about a little bit more later on, it's going to shape how we come out of this whole COVID situation. And just also that we are clear, I may look like I'm in my office, but I'm not. I'm actually working from home. This is a virtual backdrop. So it's again a reminder that this is not over yet. So there's still a lot of uncertainty as to how we recover, what the recovery will be. So again, it's going to be game-changing.
One more, I'm just going to pause you there. And I'd like to welcome our final panelist, Mr. Pablo Conrad, who is the Marketing Director for ExxonMobil Lubricants Indonesia. Pablo, welcome.
Thank you so much. Thank you.
Yeah, and for our participants, I'm just going to introduce Pablo. For the Indonesian market, ExxonMobil has two brands, Federal and Mobil, both of which being marketed by Pablo and his team. Pablo has been with ExxonMobil for more than 25 years and has been assigned to different lubricants business in various markets throughout his career, including the marine and aviation sectors, as well as the industrial, passenger, and commercial vehicle segments. He also has vast experience working in markets in both South and North America, as well as in Asia. Once again, Pablo, thank you very much for joining us. We're just sort of talking about the main topic here, which is, will 2020 prove to be a game-changing year for our industry? Yes. So, yeah, would you like to sort of jump into this discussion right now?
Yeah, I would love to. Thank you very much. And sorry that I missed the connection on time. But there's no doubt that there are some changes happening in this year. In our industry, mostly driven by the two global shocks. The pandemic, of course, number one, affecting the way we live, we move, we cooperate, we work, and also the energy environment at large, with a certain dynamic as well. With those two shocks, is affecting the demand. I believe that, and we see that in data here today, right? Everything about transportation in particular is highly affected. Second quarter numbers all over the world have been deep like we've never seen before. In the markets that I support now, like Indonesia in particular, most of the personal transportation categories, including motorcycles and cars, and even everything about public transportation. So the worst demand in the second quarter this year. Going forward, 2020 is not over yet, and the COVID is not over yet. So we are yet to see the final impact into this unusual year.
I totally agree. I'm sure a lot of changes had to be made when, lockdowns, restrictions on movements, all this took place in an industry in our what we work in, where there's a lot of, shall we say, front customer-facing environment, customer-facing activities, and all that. And Ramatri, you would probably be in the forefront of this. I mean, your business actually is a lot dealing with your customers face to face. Can you share any personal sort of experiences and anecdotes about how things changed for you in the UAE when this outbreak first came about, when the lockdowns first took place?
See, when in Middle East, Asia, and Africa. Since UAE market is mainly catering to African part, okay, what is happening in this case when the lockdown started, okay, the inventories was over here, okay, during the complete lockdown because stringent, norms applied over here, okay. So after that, there was a shortage developed in between, the shortage of the base oils. So few customers instead of they forgot the base oil slate. Few customers, I'm talking about the B grade blenders, okay, they started using switching the base oils from one base oil to another base oil because African market was open, okay. Africa was not affected that much time. UAE was affected, so supply was going on, and they shifted a little bit to Group 2 base stocks. This is what happened, They used to use the Group 1, so instead of they were looking for the supplies, and since the ports was tight, the priority was given to the grain vessels and other commodity vessels, okay, not to the base oil vessels, okay. So due to that, they shifted to somewhat to Group 2 base oils during that period. Again, the things are coming back, and the shortage is there due to feedstock fundamentals, which are shaken a little bit in this part of the world. Yeah. Yes. So, and coming back on your question, again, it's going to be a game-changing year. Yeah, it is going to be a little bit game-changing year. It's not going to directly, but seeing the current trend in the base oil lubricant industry, so people are more careful about building up the inventory over here in this part of the world. They should not suffer the shortage. Their factories should not go for the shutdown. This is what is happening. Yeah, take it here.
Right, and you brought up some very interesting issues there, and which actually leads into what I was, it really piqued my interest on that aspect. And I'm going to throw this at Pablo next because what Ram mentioned earlier, since the lockdowns have ended and all that, or even during the lockdowns, there was obviously some issue with shortages. And we saw it because I'm in charge of the Middle East market. So we clearly saw it in the Middle East. And in fact, it still persists right now. Demand, however, is in that sort of slow, stable kind of a recovery phase. My question would be, why does it seem that supply hasn't been keeping pace? Are these kind of feedstock shortages linked to crude production decisions? Or is there something else at play here? Do you have any thoughts, Pablo?
Well, it's a great discussion topic, right? It's a great question. But as we all know, this is a global market, and everything will participate. And there are many dynamics affecting supply and demand as we speak, right? It's an open, transparent, global market. Different countries' demand has been affected in different ways. As I described before, different sectors, different categories also have been suffering or affecting in a different way. Needless to mention the example of the air transportation, the air industry at times was down by 90%. Of course, all of us supply those industries out of the base materials, if you will, from hydrocarbons that we convert into base stocks, that we convert into something else, and we add our additives and continue doing. So the global dynamic of this industry is really working at the best now. Supply and demand curves will cross eventually, but now they're following two different patterns. And there are many factors affecting our value chain beyond the lubes value chain. Demand for fuels, demand for diesel, overall demand for energy in the second quarter was highly affected. So of course that has implications on the way we supply our business. But the other side that I commented before is how the demand is being affected through people restrictions all over the country. And that in the end is the one that's going to be driving the effect on the supply as well.
Thank you. So there are complicated, factors at play. And you mentioned demand a lot. Hence, I'd like to sort of now, sometimes in many cases, people would say that demand for additives is actually a reflection of what's happening as well for the finished lube demand, because you need the additives, you need the demand for additives to finalize your end product. And so, Paul, I just like to ask you on this. Do you think, based on what we're hearing from the market, there is demand? Demand is clearly recovering. That's partly driving the prices in many of these trading centers higher. But has it regained to the levels before all this has happened? Paul, what do you think? From your perspective?
I think if you look at it globally, I don't think it has. And depending on who you speak to, there were some reports by, I think Klein put out a report earlier this year where they estimate that lubricants demand globally would fall by something like 15%. And I think IHS marketed something similar at around 11%. So yes, globally yes, and it will take a while to recover. I've heard some people say as long as 5 to 7 years to even get back to 2019 levels. But again, you have to look at when we are trying to look at demand and supply and where the gaps are, then I think we really need to look at the product mix itself. Because I think someone alluded to earlier that if you look at the passenger car or the consumer side of lubricants, that has fallen drastically because a lot of people are working from home. They're not moving from point A to point B. But if you look at the commercial side, actually a lot of businesses are still running. Because don't forget that while governments have issued lockdowns, they had to let essential services continue to fly. Essential services includes movements of emergency vehicles, for example, movement of goods and services that are tied to personal protection equipment, hygiene equipment, all those things to support the healthcare sector. So all that is still going on, and even regionally now we are beginning to see China recovering much faster than everybody else. In fact, from our perspective, they seem to have almost caught up in some areas and even exceeded where they were last year, depending on what market segments you're looking at. So yes, the overall volumes are down, but if you look at demand and supply, just because of the way some areas are recovering faster or even outpacing what was previously before, we will have this dislocation in demand and supply as well.
Very interesting aspect on China. So here's another question on an equally important base oils market, I would say. Ramatri, you've had experience working in India and you've done trades into India as well. How is that? How has demand there sort of responded? They are still grappling with this outbreak, and it is still, as far as we know, based on the mainstream news reports, is that their situation there is still fairly dire. However, we've heard also that base oils demand in India has actually picked up quite a bit. Any thoughts on that? I mean, you actively trade as well in this industry?
Yeah, see, I'll be very precise. If we see the Middle East, Asia, particularly the neighboring country Iran and Saudi Arabia and India, see, in this part of the world, mainly the business is done and on the Group 1 base oils. If we see the feedstock fundamentals originating from Iran, since the gas oil, gasoline production is cut down by the refineries, I mean, whatever they were cracking, they reduced, okay? Due to that, the feedstock which is used in the Group 1 base oil plants in Iran, okay, the shortage of that is there. This is one. Second, in India, since it is most of the, India is fed by the Group 1 is fed from the neighboring country, from Iran, okay, so the shortage is there. Even few Indian refiners, which are also very active in the lubricant business, they also reduced their productions because their tanks was, on the top, they are overflowing, okay. So they reduced the, production. Due to that, the feedstock was shaken, and some of them, they are looking for the Group 1 base oils in India. This is a surge there in India because the country is fully open, and there is a, shortages there particularly for the Group 1 base oils in India. This is what I can see. And more or less, it seems to me it is shaken or shortages are due to the feedstock fundamentals which are shaken, for the base oils in general.
as we speak right now, I'm looking at the poll that the organizers started right at the beginning of this. And the question, it was sort of a simple yes or no answer. Do you think 2020 will prove to be a game-changing year for our industry? And the answers that have come in so far overwhelmingly in favor of a yes. Oh, yeah. Overwhelmingly, 94%, which essentially means the industry is accepting that this will change the fundamentals for the base oils industry. Now, I'd like to take this a little a step forward in terms of the look ahead. So we've seen many governments across the world have now shown, shall we say, a greater willingness to quickly and reimpose these lockdowns, restrictions, and all that. I mean, for example, there were reimposition of lockdowns in Vietnam. Indonesia began a new lockdown in the capital this week. Parts of Australia have closed their borders, their state borders. This signals to me a stronger determination to really get this virus outbreak under control. Going forward, with all this in mind, how could members in the trading community, producers, even buyers better manage their risks in future with the threat of this resurgence just hanging over everyone? Pablo, perhaps you could take a stab at this first. Thank you.
Yeah, I will start and then I will let my colleagues in the panel elaborate on this one as well, right? There's no doubt that there are many ways to see this second wave, if you will. First of all of us are employers. We employ people in many countries around the world. And our top priority, at least in our case in ExxonMobil, is the safety and well-being of our colleagues and ourselves. So we'll do everything we can to keep ourselves safe, our community safe, our partners safe. So everything we'll do with the new normal, the new way of working, as virtual as possible, as safe as possible, without disappointing our customers and communities and government. So that's a must. Now with the new way, we'll adjust. And we'll adjust in such a way to keep operations safe, flowing. The other side of seeing that one is for us as a business entrepreneurs or business owners and business managers. So we see what's happening in the world. And as I was describing before, probably it's too early to see the total impact of COVID in 2020, because as some of my colleagues from Lubrizol were describing before, you see some markets on the world with full recovery, like China. Others are not there yet. What we see in South Asia in many markets is, again, a big dip on demand on the second quarter, some recovery on the third quarter, but we're not there yet. So for that, we'll see what happens. What we also see is this situation is probably not fully changing trends, but accelerating trends. And we see that happening in many ways. We see all of us as the end of the value chain, all of us consumers, in the way we connect with brands and companies on services digitally. That has been accelerated through pandemic. It's not a change. It's something faster than anticipated before. We also see probably the change in some transportation sectors, probably less crowded people packing a train or a bus or a metro at the expense of probably trying to get more individual transportation. So that will have a change in the demand profile as well. And you can go from those examples on the far end of the value chain into what does it mean. And what we see is that demand profile will change most likely, yet to be seen how far, how big, in what events.
Thank you. So from the other side, Paul, do you think anything stands out from your side of the industry? Any changes, any sort of demand for certain specific additives, certain grades, how you do your business? What are your thoughts there?
I guess in the short term, it comes back again to there'll be greater demand on the commercial side of things. Mm-hmm. Then we are also beginning to see in certain places like China, for example, last couple of months, the PMI, the Purchasing Managers Index, have gone positive. So their industry is beginning to pick up. So in the industrial side, we can expect to see industrial lubrication pick up as well. And I think a lot of this has got to do with the fact that if we went back a few months ago, many of us were probably caught unprepared, and we thought this thing, based on maybe memories of SARS, would just go away by the time, June or July approaches. But I think that thing about waiting out for things to change and improve, that mindset has morphed a bit. I think the mindset today is this is here to stay. And to Pablo's point, yes, we need to be safe, definitely. We need to stay safe. How do we still stay safe and continue running the business? So you have to think in terms of those kind of mindsets, and which are in that. Then if you reflect on that, then and think about what actions government will take in lockdowns, even because even when they have lockdowns these days, it's not a complete shutdown when it was first fall. They would have allow certain businesses, certain things to continue. So watching how the government actually contains issues is also something that I think all of us as the industry need to watch, because those are the telltale signs of where demand is going to pick up and where demand is actually going to slack. Help us identify the gaps and be ready from a supply point of view. Then, of course, if we begin to look further ahead, then if we think in terms of consumer behaviors that I talk about, those consumer behaviors will change. I think Pablo mentioned digitalization. That has definitely accelerated. I mean, today we are connected this way. In the past, nobody would have think of connecting up a conference this way, but today this is a norm. I think there was a question earlier, how do we interact with customers? When this first started, we all just stayed in our own places and didn't want to go anywhere, right? And then we realized that our customers themselves were locked up, and they were actually hungry for information. They were hungry for interaction. So we find ways to interact them. We have webinars. In fact, recently one of my colleagues was helping a customer's customer. In other words, one of our customer's customer was having an issue in their plant. This was an industrial setting. And we actually did troubleshooting virtually. Today's technology, and people's openness to embrace that technology, that seems to be, again, possible. So I think business will pick up within the confines of how we stay safe. We just need to be prepared in terms of how we will do that.
Very good. Ramatri, how do you think the traders are managing their risks in this? I mean, you would see these so-called lockdowns announced. One in Indonesia they took 3 days. They just announced it 3 days, pretty much in advance. These kind of situations raise the risks of disruptions, delayed shipments. How would traders in the future learn to handle these? How would they, better manage these risks?
See, in the coming, if you see the demand from the demand perspective, demand is growing. Yeah, it will, and to reach on the same level, it will take minimum 1.5 year or 2 years time. Okay, that's presumably okay. This is one. As per the governments are taking very pragmatic approach in implementing the new norms, for the lockdowns, and keeping in view the second wave, which they're thinking on that side. Okay, so keeping everything on the balanced scorecard, they are going to adopt certain strategies. Some areas could be locked down, some area could be left open. Okay, this is what they cannot completely lock down the countries it was done during the beginning of the COVID. Okay, so they will adopt this thing, and coming back on the base oil trading, the strategies in the coming down the line next quarter or next year. Okay, see, it seems to me they need to go for some hedging strategies. Okay, because if any lockdown or anything comes in any unforeseen event, okay, they should look for those options to explore in consultation with the ISIS or like other organizations. Okay, they can take in the account, and they should hedge their products, okay, for a better trade in the future. And maybe we need to look for the sustainable business model more, because the port authorities, all these lockdowns, this is what is happening. So I think, in my opinion, one should look for the hedging strategies and sustainable business model, which has to be followed in the coming months and coming years. Yeah.
Very good. I just want to pause at this point. I just want to reach out to the participants and say that if anyone has any questions, please post them through the Slido application so that we can sort of have a look and perhaps tackle some of these questions. There is yet another ongoing poll. The question was, do you agree the industry is better positioned to handle a potential second wave? And interestingly enough, it's 50-50. So I guess it comes down to, as what all three panelists have said, it depends on where you're positioned, right? And your strategies. So, I want to just sort of touch very just into one more specific area. So there's general agreement from the industry, from people here, the panelists, that this will change the game. One of the things that I was interested in, and Ram, you mentioned this actually earlier. Now, has the pandemic done anything to speed up this trend of substitution from Group 1 to Group 2? As we know, Group 1 essentially globally accounts for about, off the top of my head, 30% of the global base oils market. Obviously, over the past few years, there has been a trend moving towards Group 2. Has the pandemic done anything to sort of speed up this, or has it simply just been seen as a minor speed bump? And once this thing is over, everyone goes back to what they were doing. If you were a Group 1 user, you'd go back to Group 1 because, well, it costs less and it has specific properties that you need. Or has the situation changed completely? Ramatri, please, since you brought this up.
See, I'll completely agree with you. This is a speed bump sort of thing, okay? Industry will little bit change will come, and maybe the Group 2 will take more space, particularly because the consumer sentiments, in Africa goes on a different patterns. I'm talking about the Middle East, Asia and Africa, okay? If it is adopted, okay? But this is, again, industry will come back on that. Little, maybe, hardly any magnitude of 1 or 2% the change is going to be. Otherwise, it's a speed bump. That's it. Yeah.
Paul, any thoughts?
I guess Group 1, like you say, has its users. Some of it is driven regionally, like what you're pointing about Middle East and Africa. Another big user of Group 1 is actually the marine business.
That's right.
So that's the other one where Group 1 goes to. But if you think in terms of the automotive space, and if you think in terms of what COVID might have done, it's actually COVID may have pointed a finger at emissions issues. Because one of the things that we have seen in many countries is the emissions actually improve when we were in lockdown. And I personally wonder whether that would force the emissions issues in countries like in Southeast Asia, take Indonesia as an example, where the government have kind of not been as progressive when it comes to pushing the emissions agenda, begin to do that. Because if they begin to do that, then the lubricants profile will change and you will require more Group 2 to be used in those applications. So that could be one change that could come on the horizon, especially in countries where today they may not be as tight on emissions controls, but could be tomorrow in the future. And that would cause the lubricants profile to change or upgrade.
Right. Pablo, I kind of saved you for last because I'm going to put you on the spot here. ExxonMobil has expanded huge capacity in Group 2. At the same time, they've also openly said that there's always a place for Group 1. How do you think, all these statements were before the outbreak. How do you think this has changed in any way?
Yeah, we're not making specific comments about ExxonMobil, right? But as an observer, I agree with the comment from Ram and Paul, right? I think that there's going to be, and as I said before, an acceleration of many of the trends globally, including the look for higher performance lubricants and lubricants that can also support environmental claims, if you will, right? Again, it may be just a speed bump in the road, but there's no way back in this area. I believe that the consumers, customers, and societies will demand better performance, cleaner combustions. That's hard to discuss. And this COVID is unearthing many of those trends, or even accelerating some of those trends. I believe that's going to be some of the takeaways of COVID, the further acceleration of the trends that we have observed the last decade or so.
Great. We have a couple of questions from the participants. Now, I think the first one, how will the motor vehicle lubricant market be affected in Asia? I think we've sort of gotten into that. We've kind of addressed some parts of it. I'm just going to jump to the third question, which, my last base oil conference in October last year this was a hot topic then. It kind of got put to the back burner over the last few months. But this is still an interesting topic. Will 2020 be a game-changing year for EVs, electric vehicles? How has this pandemic changed this? I'm opening this up. Anyone who has any thoughts on this?
That's an interesting question. I mean, most countries they see EVs as a way for emissions control, obviously, and a lot of countries have put a date out into the future. Like Singapore is 2040, some countries 2050, 2030, depending on where you are. But I think this COVID thing may actually accelerate that, not necessarily because of the emission agenda. But if you think in terms of how people would view transportation, if you think in terms of things like shared mobility, maybe wanting to have more things in your car, because we talk about the acceleration of digitalization. If you think of your car as an extended iPad, for example, you think in terms of things that you could do in the car that you couldn't do today, that's probably only possible if the car is electric. So I think there's going to be a mindset change in terms of how people view transportation and how they consume transportation that will have an impact on this whole question of the EV.
Yeah, I agree with Paul once again, right? I think that we are observing probably, once again, acceleration of many of the trends. Paul mentioned digitalization, the whole mobility universe at large, right? And the balance between, which is connected to one of the questions in the Q&A as well, the growth of the four-wheelers at the expense of two-wheelers or not, or public transportation. It may stop growing and declining because people would not like to be packed in the same small tube with others breathing next to you as well. Those, I believe, are going to be right, the trends that will evolve or change in the future. And that may have an implication for more cars or more private vehicles instead of a packed situation in those cities that can afford it, in those cities that you can have a sophisticated transportation network.
I'll say, as for the question, changing year for EV 2020, okay. See, if we go in more details, if we see on the global level, what Pablo said and Mr. Paul said, it is very correct, okay. If we go more deep in the details, how the countries are affected with the COVID, this is, first thing. If I take the example of China, then China may not be, you can see the, EV is going to give a good impact. But if you see, in Middle East Asia and Indian part, okay, because they're affected heavily with the COVID, okay, a lot of, issues are there, okay, so many, changes are there within the government, outside the government, financially, and, from the economic point of view. So there we can see it is not going to give a big change, at least in 2020. This is what I can see. The number of EV sales or number of EV, basis, okay. I don't agree on that point, okay. yeah, in some countries where COVID is controlled very well, there it is maybe, exploration may be there.
Great. This other question: which Asian country has responded best to COVID-19? I'm going to stick my neck out and say it's not clear, simply because we are not past, we are not at the end. I think this is a general agreement. There are countries, and we would, the ones that come to mind would be Vietnam and China, who have perhaps dealt with this in terms of reducing their numbers. However, I would like to sort of openly say that I think we're still not past the end point of this. Does anyone have any?
Yeah, I would agree with that, because if you look at this whole COVID virus, right? Someone was sharing me, this is, besides being a health issue, obviously, it's actually an anti-social virus. It doesn't want people to come together.
Yep.
But human nature is such that we want to come together, whether it's in business or in our social lives, we want to come together. And for the world to continue moving, we have to come together. And so the governments are all trying to find that right balance, right? How do you open up enough so that you don't kill businesses? And how we as social creatures actually support businesses as consumer is important as well. So they have to do that. And at the same time, they have to make sure that, if there's an outbreak, how do you deal with it such that it doesn't overrun your health infrastructure? Until we get, either get herd immunity or vaccine is in place and everyone's vaccinated, this is with us. And it's something that we will have to deal with. So it's hard to say, who has crossed the line and who has not crossed the line. I would agree with you in that respect.
Yep. The next question was on China-based oils demand. Now, this is a little bit, China is not really my area of expertise, but I'm open to anyone who does business in China. Has recovered fully. Are we talking? If we're talking about back to pre-COVID-19 levels, I would say no. Is it recovering? I believe so. I think China's leading the way in terms of demand recovery, simply because they were the first to go into this situation. They were the first to exit the major lockdowns. So I think think it's still in recovery. Ram, what do you think? Other business divisions, do they do with much business in China?
Yeah, they are doing the business. Okay,
yeah.
They are still they recovered. More or less they are recovering. Okay, and the recovery is very fast. Okay, they are coming back on the track very fast. Yeah, I agree with you completely.
Yeah. Next question. This might be more for you, Pablo. Are we likely to see in-region manufacturer or players win the day as demand recovers versus companies who reduce regional plants during this crisis? I guess what the question is asking is, would companies with a regional footprint recover faster versus companies who decided to consolidate or cut back on production during the crisis? So what do you think? I mean, that's how I'm reading it.
Right? I cannot speak to many others, or of course, certainly not about other companies. Mm-hmm. But in our case, we have aggressive growth plans. We are investing to grow even more in Asia, as it is in the public domain everywhere, right? We have done massive investments in many countries around Asia as well. So we are here to win, and we're here to grow. The challenge for everybody really around this call and for our industry is to deeply understand customers' and consumers' needs, and really those are best at understanding what the industry demands, what the new trends are, what consumers and customers want. They're going to be most likely favored by consumers and customers. It's as simple as that. In our case, we are fully committed to win across Asia at large.
Mm-hmm. Rob, what do you think? We've seen shortages, particularly in the Middle East.
Yeah.
Part of this is due to reduced output and all this. Will there be blowback on this?
No, I mean, see, if I see the shortages, there is going to be blowback. Okay, for particularly the regional blenders. Okay, if I talk about multinationals. Okay, I mean they are not that much impacted, but they're pretty strong in their supply chain. Whatever the whether the pandemic is there or non-pandemic is there, and whoever is strong in the supply chain is going to take the pie of the cake. Pie. This is very clear. Okay. And I will not name the companies who are pretty strong over here in supply chain. They are reaping the benefits. Yeah.
Paul, any thoughts? Shortages and all that.
Yeah, I agree with that. I guess having a robust supply chain is important. COVID has obviously taught us in a way to address this question that you're referring to in terms of how do you keep up business continuity, security of supply. But even before COVID, if you think about it, just the geopolitics that was playing around was already kind of pushing a lot of businesses to think about putting all their eggs in one basket, right, from a supply chain point of view. So I think this has probably accelerated that thinking in terms of how will you be best positioned to supply the customers. But then I guess for our industry, we need to overlay on that, come back to Pablo's point, where is it that the demand will come from? Because if you look at our industry, right, if you take automotive, on the one hand, yes, people might think about personal mobility because they want safety, so they buy more bikes and cars. But at the same time, we have this, just talked about EV a couple of minutes ago. That's the other piece, right? Not to mention that people are also working from home. So they might buy a bike, buy a car, but they travel less, right? And at the same time also, because now we are all used to ordering in, whether it's our food, whether it's books, right? You think in terms of the supply chain for that, and that last mile delivery becomes so important now. So what would that transportation supply chain setup look like? Because then we as industry will have to come around that to make sure that that's in place to actually be able to support that last mile delivery, and how do those people work in spoke and hub and sort of a supply chain network.
Yeah, I want to build on something that both Pal and Ram made comments to, which I agree with my colleagues in the panel as well, right? This COVID also is uncovering the importance of sound and strong supply chain networks. Early on COVID, when some of the global trade got disrupted from across some borders, that uncovered some situations that we all need to have strong supply chains networks to satisfy demands that are in different places versus where the supply is. So this is one of the takeaways probably and lessons learned from this situation as well.
Right.
Indeed, we clearly saw that, right, Ram, in the Middle East a couple of months ago, where we saw these massive congestion at the ports. Demurrage was huge. Cargoes were stuck. There were people telling us 20 days offshore without being able to discharge. Logistics was an issue. So obviously all these come into play. Is that still a problem? Ram, in the Middle East, is that still an issue?
Yeah, particularly if I talk about UAE, still the issue is there, particularly on one port. Okay, that is it's still because earlier when the crude was down, it touched historically low side. Okay, then the gas oil was crude was in the minus, gas oil was on the lowest side. People started buying. Then the deliveries came, the storages was done. Now this is the time to start selling. Okay. So this is what is happening due to that, two-way now, not only buying, now selling is also, loading is also going on, which is affecting now with regard to damages. In turn, the damages are coming. Still the situation is same, no change in the situation.
Right. So which essentially highlights what Pablo was saying, both, and Paul as well, that point of view that your supply chain has got to be robust enough to withstand what's coming. And we there's general agreement. There's more volatility coming. There are more risks ahead. One last question. We just got the question seems to have disappeared, but I think I vaguely remember the question was something about are refinery expansions on hold?
Yeah.
Are we going to see? There we are. See refinery expansions on hold, specifically base oils with fuels and lubes demand getting affected. I have not seen such evidence. I have seen perhaps people, refineries maybe delaying some of these expansions, maybe, but that's about the extent of it. I haven't seen any evidence that suggests that expansions permanently on hold. I don't think so, but I'll open it up to you, to the panelists. Anyone? Pablo?
I don't have any information on that, so I cannot comment.
No,
I don't think any refinery expansion is maybe delayed, maybe due to the pandemic it may be delayed, okay, but on hold I don't see. I mean, few projects was going on, particularly in the base oil side. We can see some new plants coming up in 2021, okay, so can be figured out.
What about you, Paul? Have you seen any evidence that suggests that?
No, at least not what we're seeing in the public domain. Similar to you, you're not seeing anyone saying that they're going to stop something or pull out from a project.
I think for the Middle East, as far as I remember, and Ram, feel free to correct me on this, I don't think there were any pipeline expansions that were due this year anyway. But I think this question would be especially important for China, which had the bulk of planned expansions for this year, which was largely in Group 2s and Group 3s, if I remember correctly. So, I again, no public announcements that anyone has actually mothballed their plans for expansion. So, yeah, that question, I guess, that's about as far as we get. So we're just about running sort of low on time. I'm just gonna, before I sort of wrap this up, could each of the panelists just give me a, just their rough view. So we've decided this is a game changer, 2020. Let's start with you, Pablo. What are your thoughts?
Yes, I believe we are facing a change in the demand profile globally that yet to be assigned by market, by country, by segment. So yes, that is changing. As I said before, we also see an acceleration of many of the trends that we have been highlighting for the last decade or so. And at the same time, what we all do in this value chain of the lubricants value chain is important for society. So we are all committed to do it responsibly, safely, in the best way possible, because we still need to lubricate our ways to work, our plants, our industries, and supporting human progress. What we do is important for society, and it will continue to be post-pandemic as well.
Thanks. Paul, final words.
I think this is for sure game-changing, but I'm always the eternal optimist. So I also see this as opportunities, because those trends which Pablo mentioned and we talked about, where this digitalization, emissions control, all those to me are positive trends. And that opens up opportunities for us actually to probably take our markets to the next level in terms of the types of products and services that we bring to bear for our customers and for the various different markets.
And closing words, Ramatri, for the traders out there.
Yeah. See, coming, very particularly the companies need to look for this strong supply chain network. This is one. This is the pandemic, takeaways. This is one. Second is looking for the, from the base oil trading community side, some new, need to explore the hedging strategies or safeguarding their own, interest. Okay. Third, as Pablo said, we need to focus in this pandemic time or, during this time, the digitalization. Okay. Need to interact with customers more digitally, as we are, having a, ICIS conference this time virtually. Okay, I was not expecting. Never I'm going to see, guys virtually on this side. Okay, and look for more sustainable business model. Yeah, this is what the takeaways of this pandemic. Yeah.
I agree. So, just to close off this discussion, I would just also like to say this. It's obvious we are facing risks. This year will change the market. It will change the industry. We need to think on our feet. Suppliers, producers, traders, buyers, everyone needs to be a little bit more nimble, be ready to respond to these changed environments, harden your supply chains. Yes, so I think we've come to the end of the discussion. First thing, just to thank all the panelists, Paul, Pablo, Ramatri, thank you so much for taking the time. All the participants out there who contributed with the questions and feedback, thank you so much. I can't see most of you, but thank you for taking the time. Also, I would like to say that we here at ICIS, we're still running things. As you can tell, I'm working from home probably for a while more, but we're still out there supporting you. So thanks again, everyone. And I hope to speak with you again. Is it about probably in a month's time when we have the Middle East Base Oils Conference, hopefully. Thank you very much.
Thank you. Thank you, all of you.
Thank you.
Thanks. Bye-bye.